Morning to all the dignitaries and my dear friends. I am Zika from VVSB. Would like to take the privilege of introducing Sri Bitin Mahanta. Sri Bitin Mahanta is working as a Chief General Manager in the Market Intermediaries Regulation and Supervision Department and is in the charge of supervision, enforcement and complaints worldwide. Sri Bitin Mahanta has worked in various departments at SEBI, which includes investigation, surveillance, derivatives, and new projects, organization restructuring cell, systematic stability unit, market regulation department, and investment management department. Shri Mahanta is a postgraduate in economics and holds a degree in MBA Finance from IIS WBM, Kolkata. Shri Mahanta also holds a degree in public policy from Graduate Research Institute for Public Studies, Tokyo, Japan, and is an FRN. I request Bitin sir to address the gathering. I also welcome Mr. Nagabhushan sir for this session. We are honored with you present, sir. Give him a round of applause.
Yeah, good morning. Thank you for assembling over here for our awareness program. I myself from BSc. My name is Nagabhushan. I work in BSc's IPM department as an executive. I just came here to give you some brief about the market, how it runs, because you are the future investors, and sir is there to assure all these compliances and everything happens for you. So, thanks for assembling mainly. And mainly, I came here to explain to you about our market. So, see, we are the oldest exchange. As your people are aware that we are 150 years old. Just we are completing this in this July 9th. We are completing 150 years. So we are the oldest exchange. When we started, it was here in that place. Now it is a Horrible Circle Park. Now earlier when we started in 1875, and that banyan tree was there. In that under this banyan tree, with few stock brokers, it's not stock. With few brokers, we had started the business. Now, as you people are aware, now our iconic building has come down over there. Not over there, this is just beside that, but that iconic building is there. Every day you people see there. See, earlier, before 92, this online trading was not there. So at that time, offline trading is what we call, if we want to buy any shares in the market, we want to enter into that ring and we want to buy, but not we are buying. At our behalf, our peoples are buying. Yeah. So in this building, when we had started, means when we want to buy or sell any shares on our exchange, our stockbroker, wherever you open the account, that stockbroker's representative go and buy on our behalf on that this thing. So what we call that is a ring. In that at that time that outcry system was there. Outcry in the sense we want to buy. It's in that ring. Total ABCD was all the companies jobbers will be there who can around who can buy and sell at that time. Means before coming of online. Now the online has started. So at that time, what that finger instructions are the main for buying or selling of the shares. At that time, if you people see that if you want to buy means you want to rotate the hand and you want to show all these fingers. On that base, the person if he is on long also, he can understand that I want to sell and he is buying that share. And if he is selling, I am buying the share, it's on that fingertips only, the transaction had happened. Now what happened after this online system had started? Now stockbrokers only giving uh, their software into our hand only. It means that mobile. In that mobile only we can buy and we can sell. So same way. Earlier field is used of stockbrokers. Now it is used of this thing. See what that before earlier 92 and now this the transition started with this fasting. It's earlier we are on bullet cards. Now we are on the speed trades. So that much changes had come up into our software. See, even in the money transaction also, everything is happening online only. The same way, even our stock market has also come down to the online 94 only. See, I think you people have never watched the share certificate. This is the share certificate before this 96 demonetization had started. This year 2000, lot of them had this share certificates. And now what happened after online transaction? This that converted physical converted to online. It's electronic. In this electronic world, earlier if you want to buy a land share, that's of 5 shares. If you are buying 5,000 or 10,000, this much whole bunch had been happened. That shares. So now only single transaction, whatever you buy, in electronic what it shows. And earlier we are having scare of theft or cockroaches biting or something happening. That time we had a lot of problems. But in this online system, you don't want to face anything like that. Okay. So I explain you how you should go ahead with the market. Earlier when we were when we want to buy shares, we want to open one demat account, trading account, and saving account. These accounts are must. In these three accounts, before opening any account with any stockbroker, just verify to that particular stockbroker is listed with SEBI or not. For that, sebi.gov.in is the website of SEBI. Sir will explain you afterwards after my completion. In that, if that broker's name is appearing, then only you transact with that person. And if that broker insists you to give the money, will miss in cash. Don't do such transactions. Whatever you do the transaction, it should be online. That amount should go directly to the broker account. And when you sell the shares from broker account to our account, it should come down. And as lot of changes have happened, so I will explain about that. Now T plus 1, it's trading plus 1 day. Even T plus 0 is also there. So if you trade today, if you are going to buy, means before buying, earlier in the before 9 o'clock, our account should be loaded particular amount. Then you can buy. But when you sell the share same way, whatever amount you had sold, that's amount will be credited to our account next day. Which if you are traded today, next day it will if you sell, it will come to our account. And if it is in between Friday, Saturday or Sunday, then it goes to another because only working days only Monday to Friday only they are having the market. So on that days only T plus 1 are going to transact. So as I told you, whenever you people do any transactions, so if anybody wants to trap it also, don't go into that. Mainly we came to tell that awareness only we came to give you. Maybe whoever, whenever you people open the account, at that time you get lot of messages, lot of calls from third persons that just invest with us, we are giving you the tips, don't want that because that is a trap for us. If we go and we watch that particular script for 1 day, 2 day, or 5 days, it may be moving on. But after that, it will come down. So what we as a SEBI and BSE exchange, what we are telling, whenever you are going to buy any share, before that, you just check that company. If I am telling to buy, don't trust on me also. As from my BSE, and you think, yeah, service code, then I am buying this, it is 100% false. So what I am telling, if you want to buy any shares, you before that, just see about the company's details, how it works and how they are given a dividend and a bonus, and then from then onwards the company is there, and what are the future investments and what are the future plans. Everything is in our website. If it is listed with us at bseindia.com, that website name, just come down to website, and in that website, everything, each and everything, whatever we provide to the SEBI, that all details will be there into our exchange. In that exchange, you can see when it has come down, at what price it has come down, when they have given dividend in the sense, interest. Every year some company gives interest. Some company gives 2 times also, some company gives 1 time also. At that time, you check it, and when they have given the bonus, if you forget shares are there, forget company shares are there. So when it has listed, and when it has given the interest, and when it has given the dividend, its bonus, all things you can see at each and everything. So before buying any stock, you just check what are who are the shareholders, who means mainly promoters, and how much stake they are having, and how much stake public is having. On that behalf, if you purchase, then 100% it will be yours only. If you are going to buy on some XYZ person, and if it is gain means 100% okay, but if it gets lost, it is our hard earned money. So it will be a problem for us only. So what we are insisting, whenever you want to come down to our market, there are a lot of websites also there. But before that, our website, it will provide you each and every aspect of it. On that base only you can buy and you can sell. See, what is, when we had started, the index in 86, it was 100 points. Now it is 82,000 plus. Means from 86 to now, if you see, there are a lot of changes that happened. So every time it is increasing only, market is increasing. So we are telling, come down. And one more best option is there. In this market, in our stock market, you are at this age, if you people invest, then it will be benefit for your future, this retirement plan, whatever you are planning, it will be benefit for you people. So this I will show you the chart. See how market gone up and came down, all these things are there. So when the market had gone up, when has it come down, so everything it is there. Yeah, so as this is showing why you need money. So as I told you, why we are investing, if we are a stock, if you want to do any job also, if you want to plan anything for our marriage or any other expenses, it will be useful for us. And mainly what happening, this, if you people from now onwards, as recently, CBS gave permission for mutual fund to invest at 250 rupees also. So if you people buy 250 means one share comes. At that one mutual fund also, you can slowly in the SIP trade, if you plan and future you can increase as much as possible. You can go for SIP also, and you can go for any market this thing also. So as I told you, the basic things what we want. That's the chart that showing. So I will explain you one more thing. Uh, Mainly, when you come down to the market, there are two types of market in our side. One is primary market and another is secondary market. I think you people know primary market. Are you aware about primary market or not? Tell me about that something. When first time company comes to the market, they collect the money from the public. On that base only they are investing. So that is called IPO, initial public offering. In that IPO, companies coming first time. Companies coming first time, and they are alerting that share at that time. It may be 10 rupees plus some premium. And after when it comes to the listing on our exchange, then it comes under secondary market. So when we have missed in IPO, then we can go for secondary market to buy. If it is listed, then the company has given for 100 rupees and it has listed at 200. At that time, if companies can buy at 200 or 210, whatever that rate comes on the screen. On that basis only you want to jump. So specifically, I am telling, never ever trust anybody else. Please do your homework. Some 5 minutes or 10 minutes. If you don't have that time also, then you invest that money into the mutual fund. This will be beneficial for you. Because it won't be any loss or anything. You get every year your interest and everything what you have promised earlier. Okay. And thank you. Have a beautiful sir. On pitch.
Good morning, everyone. Good morning. I'm Nitin Mahanta. So, I see a lot of people here. So, it's great that all of you take interest to come down and listen to BSc and SEMI. So, to make the presentation more interesting, I would like to ask questions with these slides. So, let us make it like a dialogue. So, at any point in time, anybody can raise hands and ask questions to me. So, the mic will circulate around. So we made a presentation. So I gather that there are people from MBA, BBA, and also I think other streams. So some of you may be aware of many of the things here. Some of you may be, some of you may be new. So as I told you, let us make it like a dialogue. You can ask any kind of doubts, questions to me. I'll try to answer in the best way possible. Okay. So should we start? So I'll talk about the Indian securities market. So, Mr. Nagabhushan has given an idea about the journey of BSC, the journey of securities market in general, from the open outcry where people used to assemble physically to now everything being online. And you also see the journey of the Sensex. So, the majority of these developments and majority of this thing came out when SEBI was established in 1992. So, SEBI was established through an act called SEBI Act, Securities and Exchange Board of India Act. And before I give the presentation, just some mandatory disclaimers. So these are the standard disclaimers that information contained in this presentation is as of a particular date. These are my views. This is just for investor awareness, and it is only for educational and investor awareness programs. And SEBI because we should not be responsible for any damage or loss of use of any manner in the use of this material. So this material will be shared with you so that you can retain it and use it for future reference. And for any feedbacks or suggestions, or if you have any questions, you can send a mail to visit SEBI, visit sebi.gov.in. This email ID is if you want a visit to SEBI, like you want to visit the SEBI headquarters in Mumbai. So we also arrange programs where you can go and visit the SEBI office, and there also you will be taken through the primer of the securities market and all your doubts and questions can be resolved. Like, is it possible to keep the laptop like so the flow presentation is what is SEBI and what are the constituents of this Indian securities market. So there are three major constituents. That is the market infrastructure institutions, companies, and investors. They are the ones who make up the entire securities market. So market infrastructure institutions are like basic exchanges, depositories, I hope you know about exchanges, depositories, and clearing corporations, and also the many intermediaries like stockbrokers, mutual funds. These are called intermediaries, whom the market infrastructure institutions regulate. And then there are companies. So everything which is listed on the stock exchange, everything that you see listed on the stock exchange are companies. So there are, I think, around thousands of companies listed both on BSE and NSE. So, and these are the companies which are traded by the investors. So the most important part of the ecosystem are the investors, and it is towards the well-being of the investors that SEBI, market infrastructure institutions, we all work towards. Then we see what is primary market and secondary market. So Rakushan has given us a small idea about what is primary market and secondary market. Then, since you are potential future investors, you should know what are the prerequisites buying and selling in the market. What should we be aware about? What are the things you need to see before you invest in the securities market? Then we see as when you buy shares, you become a shareholder of the company. So what are the rights that you have as a shareholder? So when you say you buy one share of Infosys, you become a shareholder to that percentage, to the extent of that percentage of the company. Then we see what are mutual funds. Then some do's and don'ts which already Mr. Nakushan has given an idea about what you should see, what you should be careful about when investing in the securities market. Then, if you have invested and if you have any complaints or grievances, what is the forum? There is where you can get a resolution of these. That is called the scores. I'll take you to that. And then, if you have any information or you have queries, then SEBI also has a helpline. So you can ring up on the helpline and pose your questions to it. So, as I told you, Securities and Exchange Board of India was established by the SEBI Act in 1992. And thereafter, the SEBI Act has also undergone many changes. But the preamble of SEBI, what are the three main key mandates of SEBI Act? One is protection of interests of investors. As I told you, that investors are the most important constituents of this market, and they hold the primary importance for all other stakeholders in the market. Then, apart from promoting the interest of protecting the interest of investors, we also promote development of securities market. So, like Mr. Nakushan told you, we moved from T plus 14 to T plus 1 now, and also for certain 60 plus 0. So, these are all developments which take place in the securities market. Any kind of policy that SEBI comes out with regard to making the market simpler, easier, and efficient for the investors is contributes towards the second mandate. And thirdly is regulation of securities market. You will be knowing SEBI has made many regulations. So there are three thick volumes of SEBI regulations, and there are multiple circulars also. So then SEBI, what it does, since it has issued these regulations, we also have to see that everybody in the stock market securities market is adhering to these regulations and circulars and guidelines of SEBI. So that is how regulation takes place. Then what are the major work done by SEBI? It is all related to these three key mandates. Improvement in market design, an example of the T plus 2, T plus 0, etc. Then availability of new products is also towards making the markets more efficient. Like you will see many new derivatives, like recently specialized investment fund, like a product between mutual funds and portfolio management services was introduced. So this is also newer products to make to enhance participation. Right? It is a step towards financial and also increase in market efficiency and transparency. Transparency through effective regulation and efficiency through improvements in policy design. Now, as I told you that the security is SEBI sits at the top of the regulator, and stock exchanges, clearing corporations, depositories, which are collectively known as infrastructure institutions, because these provide the infrastructure for the whole market to run. Then companies are listed on stock exchanges. Companies are the units in which investors trade. And below that are some intermediaries like stock brokers, which are regulated by the stock exchanges. Then there are depository participants. So, do you know what a depository is? Can anybody tell me what a depository is? Anybody? So, as you saw in the last initially they were physical certificates. Then physical certificates were dematerialized. They were made into an electronic form which can be transferred or sold easily. Seamless movement across demat accounts. So depositories are the central repository of all such demat accounts. So every investor in the securities market, if he has to trade in the market, needs, I'm sure that will be the latest slide also, needs to have a demat account which is managed by the depository participants. So the depository being the central repository. So like you have bank and branches, so if you compare the bank to the depository and branches are the depository participants. So any investor will register with the depository participant where he will open his account for demat shares. And then there are other intermediaries in the market such as merchant bankers. Merchant bankers participate in IPOs. They make the process easier. Then there are registrar and transfer agents, RTAs, who maintain a list of the shareholders of the company and enable transmission, which I'll show you later. So, these are the key differences between primary market and secondary market. Primary market, as you saw in the last slide, is where the shares are first offered to the public. So this is the new issue market, and the company comes out with an IPO, and in consultation with merchant bankers, RTAs, key, and they could there are two purposes for which any company could come out with a primary issue. One is to raise new capital for investment, and the other is for diversification or selling their stakes. And secondary market is the one where you constantly, like every day the news you see the Nifty, the Sensex has gone up by so many percentages or fallen by so many percentages. That is where people create these issue shares. So if anybody has subscribed to the IPO, they want to now sell it, they can do it only in the secondary market. And the main constituents of secondary market are stockbrokers and DPs who help you to trade and sell. And the main purpose of secondary markets is trading, providing liquidity, and raising further capital. So, primary market, has where shares are issued. There are four types of issues: public issues, where shares are offered to the public, first time of the general public at large. Rights and bonus are to existing shareholders, and private placements, where there is preferential issue and qualified institutional payment is issued privately. It's not offered to all the shareholders or the public at large. And even in public issues, you have IPOs and FPOs. So broadly, IPOs is if a company is coming for the first time to the securities market to issue shares, and an already listed company, if it comes and issues shares, it's called a follow-on public offering, FPO. So, if as prospective investors, if you want to apply in a public issue, what should you know? So, SEBI has come out with a mechanism called ASBA. So, when you apply in the securities market for an IPO, the entire amount of money you don't have to give it at the beginning, at the outset. So, suppose you have applied for 10 shares worth 10 rupees each, that is 100 rupees. That amount will be blocked in your bank account with this application, and then the money will not flow till the shares are allotted. This is what is mentioned. And then there is the UPI facility also in ASMA. If you want to use the ASMA, you can use UPI, but you can do it only till 5 lakh rupees. And then there are 3-in-1 accounts. You must have heard about ICICI Direct or maybe HBC Securities. So these apps offer you bank account, demat account. So you can apply through 3-in-1 account also. And then there is offline and online mode, which you know is one is making physical application, one is making online application. So for any kind of transaction in the securities market, you will need to have 3 things. One is savings bank account, where you will have the money to buy and sell, or you have get the money from the savings account. If you are selling, the money will flow to the savings account. Then a trading account with a semi-registered stockbroker. They are also called trading member or TMs. So as Mr. Nagushan mentioned that SEBI gives registration to all the stockbrokers, and you should deal only with the registered stockbrokers. So the list of stockbrokers is there on the website of the stock exchanges, SEBI. So you have to check the antecedents of the broker from there and then trade in the market. And also a account with the SEBI registered depository participant. So if you are buying a share, This all trading in the securities market happens through in demand form. So there is no physical certificate which is bought and sold. So if you have a DP account, then only you can receive shares, or if you are selling, you can transfer shares for selling. Then what is needed for opening a trading and demat account? So in the securities market, PAN card is the sole identifier. So before trading the securities market, you need to have a PAN card. Without a PAN card, then you cannot open an account or you cannot participate in the securities market. Then as I told you, bank account, and you need to have a proof of address. So proof of address could be passport, driving license, voter card, Aadhaar card, Manrega card, or any other government approved proof of address. Why PAN is mandatory, Aadhaar is not mandatory, but as I'll show you later, if you open an account, so Aadhaar is very simple and it's easy and fast. And for any kind of investment, as you heard from Mr. Nagaraj also, it is very important that you do proper due diligence so that you don't lose money to unscrupulous elements or posing as registered intermediaries in the market. So what you need to do is like, and even otherwise, apart from due diligence on the intermediaries you're taking, you need to know a company well, like invest. You need to analyze the company. You need to know about the company's future prospects, etc. What's past performance, and also how it is planning to grow in the future. So when you are buying a company, when you are investing in the share of a company, you need to know these things. And some questions you can ask is before investing are again related to the company's revenue stream, profits, whether the company is able to repay its debts, is the company strong enough to compete with its competitors. Basically, how is the company placed and how does it relate to, like what is its path towards future? So, as when I was showing you the flow of the presentation, I also mentioned that when you buy the share, what rights you are entitled to. So, as I told you, if you're buying one share of Infosys, you will become the owner of Infosys to that extent. Then you have the right to receive benefits like dividend. Then the company is obligated to send you annual reports, audited financial statements, notice of general meetings. General meetings are where shareholders can participate in the decision making of the company. And then any other information which is important created by the company also come to the shareholder. You can attend company. You can contribute by being a part of the company meetings by voting. So general meeting or annual general meeting, companies take major decisions where voting by shareholders is required. So if you own the shares of a company, like you have bought shares of a company, you can vote in the meeting. Then in the meeting again, you have the right to ask questions to the board of directors. You can place items, but everybody cannot place items. So there's a chunk of shareholders who have a particular percentage of shareholders in the company. They can place agenda, propose resolutions. Then you can vote, you can approve mergers and acquisitions. You also have the right to inspect company's books and records. Any investor or shareholder can demand inspection of books and records of the company. And then transfer your shares by either selling or off market. You are not trading in the market to sell. And you can also raise grievances related trading or ownership of the shares. If you have not received dividends, like, for example, then you can raise a complaint on scores. These are some recent investor protection measures. Maybe I will not go through this because it may be too technical. Next week. So next I come see there are two ways of investing in the securities market. One is with buying and selling of shares, the securities. The other is through mutual funds. So all you are aware about what mutual funds are? No, I may no answer from anybody. Huh? First is but nowadays students are also very savvy. They start investing for very good. So mutual funds are vehicles like you must have heard about SBI mutual fund or any kind of mutual fund. What they do is they pool the investors' money. Like suppose all of you put together, say if you contribute put say 100, and then give it to mutual fund. That mutual fund will manage your money. Means on your behalf, you don't have to do the research, you don't have to follow the market movements of buying and selling. You don't have to do the other compliances required as a shareholder. So the mutual fund will do all this for you. They generate returns and give it to you. Like you sell the mutual fund, then the returns will be yours. So that's why investors pool their money with the fund managers. So the person who manages the fund on behalf of the mutual fund is called a fund manager. They invest in securities and then these securities give returns and which is passed on to the investors. And somebody may ask why mutual funds, why not invest directly in the market? So, so one of the main reasons is diversification. So as Mr. Nagarjan told you, if you invest 100 rupees, maybe you'll be able to buy one share in the securities market if you buy directly. But if you buy 100 rupees worth of units in the mutual funds, you will get diversification. So you will get a little bit of the mutual fund portfolio. So the mutual fund has invested in 10 stocks, you will get a little bit of each stock with 100 rupees. Then convenience. Convenience is because if you invest in mutual funds, you don't have to necessarily open a demat account. So mutual funds give you electronic units. So and you don't have to trade from broker. You just have to give your order to the mutual fund. So it is convenient for investors because they don't have to. Then again, you don't have to do research. You don't have to follow the company's movements. Then because these fund managers are professionals, there is a huge return growth in mutual funds because they know how to manage people's money. Then there is flexibility and liquidity, as I told you. Because flexibility because you are able to buy, and liquidity because you can buy and sell these mutual funds at any time. You don't have to buy them, sell them on the market. You can go to the mutual fund and tell them you want to buy or sell, and they will give return or invest money. Then there are tax advantages, which is of course technical. And as I told you, professional management because the fund manager is qualified to take investment decisions. He's more knowledgeable. Like his primary mission is to invest and generate returns. So one doesn't have to be a skilled professional person to manage the funds. The fund manager will do it for you. Then these are classification of mutual funds. Like there are equity schemes which invest in equity, means in securities like Infosys shares or HDFC shares. Then debt schemes which invest in bonds. You know the difference between equity and bonds, I guess. So equity is like equity gives you a right to own a part of the company, whereas bonds are don't give you the same right to own a part, but they give you fixed returns. Equity doesn't give you fixed returns. Equity gives you dividends. Then there are hybrid schemes which are like a mix of equity and debt. Then solution-oriented schemes. Solution-oriented schemes are like if you want to invest in children's education, retirement. There are schemes which cater to these kind of needs. And for the benefit of investors, SEBI has prescribed this risk meter. So this risk meter tells you, and this risk meter is there in each, it is there in the prospectus or for each scheme, which tells you how risky this scheme is. So if it is low, it is a low risk